Hey everyone, it's Monday morning, June 16th, and welcome back to Capital Markets Quickie. I'm your host, Endrit Sella. Since it's Monday, that means it's time to dive into the big market movers for the week ahead. It's going to be a busy one, so let's get straight to it. Before we begin, a quick note. Today's episode is sponsored by AMF Capital, Asset Management Frankfurt. For tailored investment solutions and top-quality mutual funds, visit amf-capital.de. So, first things first. The big one. The Federal Reserve meets Tuesday and Wednesday, and while no change to interest rates is expected, all eyes are on the tone. Chair Powell is likely to strike a cautious note, especially with inflation still proving pretty stubborn and geopolitical risks bubbling up. Investors are also going to be watching the updated dot plot closely. That's the Fed's own forecast for where interest rates might be headed. A hawkish shift there? That could definitely rattle some nerves. But if the dots show cuts coming this year, that would be a relief. Speaking of nerves, let's talk about oil. Brent crude is up around 13% after tensions flared again between Israel and Iran. That surge in oil prices adds fuel to the inflation fire, which of course makes life trickier for central banks, especially the Fed. It's also going to ripple through Thursday's retail sales data. If consumer spending holds up despite higher energy prices, that'll be a sign of resilience. But if it wobbles, it could mean inflation is eating into demand. Now, over to Canada. Yep, the G7 summit is underway and global economic coordination is on the agenda. Inflation, energy security, tariffs, it's all there. Any strong signals on trade or coordinated fiscal policies could really move currencies, bond yields, and equities. So keep an eye on the headlines coming out of Kananaskis. Looking a bit further out, Thursday brings the Bank of England's rate decision. They're expected to hold steady at 4.25%. Policymakers have been using the word gradual a lot lately, and that makes sense. UK inflation is still sticky, and the labour market has shown some mixed signals. Gilts and anything tied to the British pound could react sharply depending on the messaging. And finally, although US markets are closed Thursday for Juneteenth, we're still expecting retail sales data, most likely Wednesday or Friday. This is super important. It's one of the few real-time reads we get on how the American consumer is doing. Strong spending would suggest the economy is holding up well, which could keep the Fed cautious. But any weakness might start to tip the scales toward a cut later this year. So yeah, it's a week where central banks are playing defense while geopolitical heat adds even more complexity. Keep your eyes on Powell, oil, and the retail data, and we'll be right back here to unpack what it all means. Have a great week ahead, everyone.